Ladies, gents, good evening from Europe. Piotr here. This is a mid-New York session market update. It's my pleasure to be with you. Good morning, good evening, whatever you are. Good afternoon, guys. Light Forex Global YouTube channel is here. So let's have a look what we have when it comes to the first trading day of March, right? So meaning new month, new challenges, but also we have to remember that's the end of the quarter is coming quickly. So the top news, of course, it's all those things coronavirus related, meaning that whenever you have new cases, of course, there is some kind of the market reaction. What I think, my way of understanding right here, right now is that even if, well, I'm pretty sure we have some kind of the central bank's activity in the background, right? For me, it looks like they're trying to settle down the volatility. That's the first thing first, right? So instead of doing the V-shaped recovery, which, well, I'm pretty sure would be faded as soon as we are going to have the first sign of that, right? Why? Now, the first thing first is that's completely different story to what we've seen in 2008 or previously when we had some kind of the risk of sentiment. This time, you know, my conspiracy theory is that all the central bankers, all those guys responsible for those financial decisions, they were needed this type of the black swan event. Why? A very simple explanation, right? It's easier to blame coronavirus, right? Instead of the guys from Deutsche Bank who are not able to properly manage their risk. It's easier to blame coronavirus instead of the Fed, ECB, and all those central bankers all around the world. It's easier to blame coronavirus than JP Morgan guys or Goldman Sachs guys, right? That's pretty easy, right? So in my opinion, if you want to know my opinion, well, it's like something like Santa came earlier this year for those guys, right? Because all of them suddenly are blaming the coronavirus. Looks, companies, right? They have no money to make the buyback, so suddenly we are hearing around about those warnings about the earnings, right? Because of what? Coronavirus. On the other hand, of course, the very scary thing is how quickly we are spreading out the virus, right? So from my perspective, I'm in Europe. So when I see the numbers, Italy, France, Germany, Spain, yes, I'm a little bit scary here. Anyway, we were trying to push the market a little bit higher, mostly in relation to what we discussed previous week. The question here is either we are going to see a little bit more storm or we are going to see, the market is going to settle down a bit. Okay, well, enough is enough. Let's have a look what we have from the chart perspective, all right? So if you remember our discussion previous week, where we are from the market perspective, well, easy to recognize those levels, right? So looks like from the Nasdaq perspective, 8,200, 8,000 psychological level, looks like that might be the case where we want to make those things quiet, right? On the other hand, right, where we see the first supply action, right? Well, I'm not gonna be surprised if we are going to get the daily close below 8,650 based on the chart I'm using. What's that 8,650? Why I'm talking about That's the lower shadow here, right? And specifically we are talking about the levels, about the low from the 8th of January 2020, right? So we are talking about what happened 2 months ago, just 2 months ago, right? From here we were spiking higher, right? We were spiking higher from here. So that's for me not surprised that we are trying to see some kind of the supply activity. But still, I do believe we might see a little bit higher levels. What I'm waiting for this latest demand zone around 9,050, 9,220, all right? That's where I'm going to look for, well, lifetime short opportunity. No, of course not. I'm far away from judging that we should crash like, you know, we haven't seen it before. No one needs that type of the crash, right? But anyway, yes, I'm going to look for the short opportunity around 9,050, 9,220. Also, if we are going to see another pullback down towards 8,350, 8,220, that's where I'm going to look for some kind of the buying opportunity based on what we discussed a second ago. So quite high volatility right now. So I provide to you some levels based on this daily chart, like the, you know, white of the 1,000 points. Yes, but guys, that's the type of the volatility we get last time. Now, the conspiracy theory is saying that we are not gonna see this type of the V-shaped recovery. Why? Why we are not going to see this time the V-shaped recovery? Well, I think, as I mentioned before, this coronavirus, if some kind of the Santa came early this year, that's what the central bankers were needed. Guys, get back, make 5 steps back, and remind yourself the case with the repo market in US just lately, right? So come on, there are plenty of insolvent institutions. Now we got the coronavirus, we can blame of that mess, right? No Fed, no the young gangster over leverage money managers, right? I spoke with one of the guy 28 years old, money manager in one of the institutions. I'm not gonna provide the name, and he told me, you know, Piotr, I haven't seen this type of the crash. Well, come on, I can imagine that you haven't seen this type of the crash, because the last one we've seen something like this, similar, not that big one, was 2008, right? And probably you were using completely different toys. Pumpers, stuff like this. Anyway, guys, that's one of the reasons, because we have to deleverage a bit, and we have great excuse called coronavirus. So I don't see the V-shaped recovery here, right? I would rather say that Fed and other central bankers are going to try to make some kind of the stabilization ahead of the further rally. We have to put the VIX lower, right? Why? Because all those 25 years old money managers, they were shorting VIX at 10, and we are right here at 40. So either they already insolvent, or they are gonna be insolvent within the next few minutes. All right? So that's how I see the things when it comes to the indices. Completely different story when it comes to the FX and currencies, but that's something we are going to discuss during our next meeting, right? Why? Because Euro, in my opinion, also went a little bit too high. Right here, if you are a fan of the moving average, we are above 200. But do you think that ECB needs that strong Euro, when it comes to the EU recovery, when it comes to the coronavirus in the Germany, Italy, Spain, France, and whatever, well, think twice, right? But we are going to get back into the discussion when it comes to the currencies. Here, when it comes to the indices, try to buy the very, 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 very deep and try to sell the rallies like towards 9,000. My pleasure to be with you here to make this market update. Well, let's have a look what we are going to get. As I mentioned, when it comes to the FX, I'm going to make separate update. Take care and goodbye, guys.